So here we completed controlling basic organization structure, controlling area, and we created number ranges, then the versions which is required to do the planning and to change your planned figures. Then as part of material ledger, we have two functionalities. One is a you want to evaluate your material prices in different currencies or different valuations, right? And number two, actual costing. So these are the two functionalities will be provided by material ledger. Number one, you want to evaluate material prices in different currencies or in different valuations. And number two, the actual costing you want to use in your business organization. Then in this case, we need to use material ledger. Or I want to use only actual costing. I don't want to use different currencies valuations, or we can call it as a parallel valuation. Parallel currencies you want to use valuation. This I don't want to use, and in this case you need to use material ledger. Or I don't want actual costing, but I want to use in my business organization the parallel valuation. My material prices, the material stock, I want to evaluate in different currencies or in different valuations. Then in that case, we need to use material ledger functionality. Maximum, SAP will allow up to 3 currencies, or maximum, it will allow 3 valuations. One is legal valuation, next group valuation, and another one is profit center valuation. With respect to material ledger, we need to create at controlling area level currency and valuation profile, and both should be in sync. Maybe we'll see later about material ledger settings and in deeply the material ledger functionality and the settings. Now what we are seeing with relation to material ledger, the currency and valuation profile should be there at controlling area level, which is supporting the same currencies, and the same settings should be in sync. This currency and valuation profile we need to create at controlling area level and assign to the controlling area, and later we need to activate it. Whenever you are activating, system will check all the rules are fulfilled, all are in sync with respect to material ledger and controlling area, with respect to profit center accounting and controlling, with respect to the currency types for ledger and company code combination, or at client level the currency types are there or not. If all are in place, then you can activate currency and valuation profile. Once you activate it, then you cannot change. So here you need to decide by keeping in mind all countries requirement at highest level, at business organization level, which currencies you want to use for material prices valuation, and which valuation need to be done in which currency. Here we cannot speak only with respect to currency separately and with respect to valuation. You need to take consideration into currency plus the valuation view. In which valuation view, which currency you want to use, or for which currency you want to store the values with respect to which valuation. So the combination of the currency type and valuation view is called a valuation approach. So these valuation approaches you need to tell as part of your currency and valuation profile. The legal valuation is mandatory, and that legal valuation always will be done in company code currency. This is used for legal reporting purpose or for your statutory reporting purpose. This is mandatory. And apart from this, I can say this is already reserved by SAP. The legal valuation is done in company code currency. This combination is already reserved and you cannot change it. You have to use it. And you have a flexibility to choose the second currency, and that second currency material prices you want to maintain with which valuation, and what will be your third currency, and to store the material values in that currency, which valuation you want to use. This you have a freedom to choose it. And this legal valuation is identified by technically in SAP with 0, group valuation with 1, and profit center valuation 2. In which valuation approach you are following, that currency type also should be created in SAP, and that you need to assign for your ledger and company code combination also those currencies. For example, these are the standard currency types which is given by SAP. Whenever you open your SAP system, by default you can find these currency types. The currency type 00 is used to identify your document currency. That means in which currency you are posting the document. That currency is called document currency. For example, I posted one document in currency INR, then my document currency is INR. And another document I posted in USD, then the document currency is called USD. It is identified with 00, and you don't need to create. SAP is already created that currency type. And whenever you are creating a company code, at the time of company code creation, we entered for our company code INR. So the company code currency type is identified with 10. So for my company code, 10 means INR. Maybe you created one more company code in US country. Then at that time you entered USD. So for that company code, currency type 10 means USD. The type is fixed. But for currency type 10, the value is changing based on your company code. For IN10 company code, currency type 10 is INR. But for US 10 company code, currency type 10 is USD. The value is changing based on your company code. Okay, here based on your document it is changing for each document. And next, controlling area currency is identified by 20. We saw at the time of creation of controlling area, if you enter 20, you can choose manually what will be your controlling area currency. That currency will become controlling area currency for your at controlling area level. For example, one controlling area is using 100 company codes for all company codes. 100 company codes. Controlling area currency type 20 is equal to whatever you entered. In our case, what we did, we selected controlling area currency as a currency type 30, means from 30 we determined into 20. Whatever is 30, that is becoming for us 20. What is 30? 30 is group currency. Group currency is used to see your group reporting at consolidation level, at highest level. Generally, the corporate group is originally basically in which country it is there. For example, Reliance group of companies is there in India, maybe their company codes are across different countries. If they want to see group reporting in INR, then whenever you are installing your SAP system at a client level in SCC4 transaction code, you need to define that INR currency as a group currency. But another group, some other company, the basic or home country is Europe, and they across spread their business and they want to see their group reporting in EUR currency. Then whenever they are setting up first time installing SAP at client level, you need to set up your group currency as a EUR. So whatever you set up at client level in SSCC4 transaction code, and that will become your group currency, and that is identified by 30. So again, it's different from your client to client, you can say. For example, wherever you are working or implementing in that client, in that landscape, you go and see in SSCC4 transaction code what is there. Now in this landscape, for example, assume this is some Reliance company you are working, then in that case, you can see in SSCC4 at client level, this is the currency, USD. So now for this business organization, group currency is USD. Maybe if you go and see in US based country, maybe in their SAP system, at this place, same USD you can see. But maybe in Europe related countries, then you can see in this place it's a UR. So that means in this field, whatever currency you put, that will become currency type 30. And that 30 we took as a controlling area currency. Means the same USD will be for us the controlling area currency also. That is identified by with 30. In our case, 20 and 30 for the same values are same. That is USD in this client. And next 40 is the hard currency. Hard currency is defined at country level. Generally, the country where the currency is more inflations. It doesn't have constant with international market with other currencies in exchanging in other currencies. It is a huge fluctuations day by day. It's changing very rapidly. In the same way, index based currency also it's set at country level. Same, this is also where you have a more inflation. In those countries, they will use for reporting purpose a different currency, that is index based currency. And next, global company currency. This maybe for all company codes. If you are using only one company, all company codes are assigned to the same company, and at that company level, whatever currency you defined, that is called global company currency. And the 70 is a CO object currency. In controlling module, for analyzing, identifying, we have different cost objects like cost center, internal order, WBS element, projects, business process, cost object, sales order, production orders. In those master data, whatever the currency you defined, you are using, you are maintaining, that currency is called object currency, and that is identified with 70. Apart from this, we can configure our own currency types if we required. For example, in our case, we required, right? In this example, if you see, as per valuation approach, if you want to do the profit center valuation, the values you want to store in INR, in company code currency itself, along with legal valuation, I want to do profit center valuation also. Then profit center valuation is identified by with 2 and currency type is company code currency 10 plus 2. Then your valuation approach is 12, and with 12 there should be a currency type. Then currency type 12 we need to create it. And in group currency USD, I want to do group valuation and I want to maintain my material values. So USD is a group currency that is 30 and valuation is identified by 31, valuation approach 31, and we should have a currency type 31. We need to create a currency type 31. So like that, if there is a need for you to create your own currency types, you can create. And in S4, for ledger and company code combination, Generally, you can say for your company code. If you want to see strictly, deeply, company code plus ledger combination you need to speak always whenever you are talking about currency. So for combination of your company code and ledger, maximum in S4, SAP supports 10 currency types. Whenever you open a document, as of now in ECC, you can see three currencies, maybe four you can see. For example, document currency is different, company code currency, and local currency type 2, and local currency type 3. So you can say 3, or if your document currency is different, we are seeing 4 columns. And now in S4, if you want, you can maintain 10 different currency types. For each and every document, it will translate from one currency to other currency, and it will maintain in 10 currencies different values in real time immediately. What are those currency types? 10 I can put as per my requirement, whatever I want. Yes, you can do, but not 10. Only 8 you can do as per your choice. You have freedom to choose 8 currency types. Then what about 2? 2 already reserved by the SAP and you have to use it. No option. Number 1, company code currency. For example, for us, whenever you are creating company code currency INR, so whenever you are posting a document, there should be a company code currency value. So one is over. And second, global currency. It's global means it's not a currency type 10. Don't confuse. Here, global currency is used with respect to controlling area currency. That is 20. That is in our case USD. So with that also, one column is maintained. The value is transferred from company code currency or document currency to controlling area currency. How you managed your conversion settings, whether you want from document currency to controlling area or from company code currency to controlling area, how you want to translate. Whatever be translation, that we'll see later. So the second one is reserved with the controlling area currency, or we can call it as a global currency. And next 8 currencies you have a freedom to choose it. If you don't want 8, maybe if you want 3, choose 3 or 5, maximum 8 from your side, then total it will become 10. And generally, one hint that whenever you are using currency translations, we know that there are two types you can maintain, right? The exchange rates. One is a direct exchange rate and one is a indirect exchange rate. If it is a direct exchange rate, at table level or at the document type of posting, somewhere you can see the exchange rate is a blank, means nothing, no prefix. If exchange rate is 60, then you can see as a 60. But if it is appearing anywhere slash and then 60, then that is not a direct quotation, that is a indirect quotation. So these are the prefixes will be followed. For direct quotation blank, or if it is a blank, you need to understand it is a direct quotation, direct exchange rate between two currencies. And if there is a slash and then exchange rate, that you need to consider it as an indirect quotation. And this currency and valuation profile should be in sync with your profit center accounting also. And here, what is the legal valuation? As the name suggesting, legal valuation is used for local, or you can say legal or statutory reporting. To prepare your P&L account and balance sheet, whatever the values you want to mention, either the cost, revenue, and all other payments, receipts, your assets, balances. But here, with respect to this, we are talking parallel valuation in multiple currencies about materials, material prices. You want to maintain in multiple currencies and multiple valuations you are doing the material prices, the stock value. So that which you need to show as per your legal statutory requirements, as per your local requirements, that values will be maintained in legal valuation in company code currency, and those values we will present in our P&L account and balance sheet or in our reports which you are submitting to the local government as per your statutory requirements. So this legal reporting, it includes transfer pricing. What is the transfer pricing? We'll see as of now. Remember that the legal valuation includes the transfer pricing. And what is a group valuation? Group valuation is used as a to group reporting purpose, or you can say at corporation level, at highest group level, to prepare consolidation reporting. Then what is the difference between your statutory reporting or group reporting or consolidation reporting? This group valuation excludes transfer pricing. So without considering transfer pricing, the group valuation is done, or I can say it eliminates your transfer pricing. Or we can say it eliminates internal revenue and internal costs, or you can say cost. The internal revenues and internal cost or internal costs will be eliminated from the reporting. After eliminating your internal revenue, internal costs, or after eliminating the transfer pricing, then system will evaluate your material stocks or materials, and that is used for consolidation reporting or for group reporting. Here if I say internal revenue, means I'm not talking from company code point of view, I'm talking from group point of view. If you take one group of companies, for example Reliance group of companies, they have business in India, they have business in US, France, different company codes you have. In one country you are manufacturing the same product, you will transfer to other country to your company. It's legally both are different entities, independent entities, different artificial persons. So you are selling from one company to other company. Whenever you are selling the product from one company to other company, you are deciding at what price I need to sell my product to the same my company in my group. So that is the transfer price. You will decide one transfer price and that price you are selling. And then because of that, whatever revenue generated or cost is there, that I am saying internal revenue at highest level, group level. There are so many company codes, and that we are transferring goods from one company code to other company code, or we are selling or purchasing between two company codes. And then from group level, I am saying internal revenue and internal costs. Those are the transfer price which you used to transfer the product from one company to another company code, that I am eliminating. And then if I do valuation, then that is called group valuation. So this is little bit complex to understand initially, but later going on you will understand. At completely you may not get at one shot, maybe phase by phase you will understand slowly. So now we know there are three valuations: legal, group and profit. And legal valuation is used for legal reporting purpose, local reporting purpose, for statutory reporting purpose, that you are aware. On the other hand, we have a group valuation. Here what I am saying, the group valuation is used for consolidation reporting or group reporting at highest corporate group level. And the basic difference, first level, we can say this legal valuation includes your transfer price. right? That's what we are saying. It includes transfer pricing. But group valuation excludes transfer pricing. That is the difference between your legal valuation and group valuation. Whatever is included, transfer price, whatever is included, internal revenue and costs, that we are eliminating. And then you are doing what is the profit. And then you are doing material valuations. That is called group valuation. For example, legal valuation you take first, how we are doing. There is a Reliance corporate group. In that we have two company codes. One is a company code 1000 like IN10 and one is a company code 2000 IN20. And both are different entities, different artificial person. This has its own set of P&L account and balance sheet. This has its own set of P&L account and balance sheet. At the end of the year, it need to submit its own reports. It did submit its own reports. And to the CEO of the corporate group, this company code will report that this much profit I earned for this year, and same this will disclose what is the profit. And at corporate group level, Reliance Group, they also at the end of the year they will do the P&L account and balance sheet at their consolidation and group reporting. For having multiple company codes, what is my profit I earned for 1 year at group level? Or what is my revenue? What is my income? Combining for all company codes, not individually. So here the company code IN10, for example, this they are manufacturing certain products. One product we manufactured at a cost of 70. So the manufacturing cost is 70. Now two options. This product you can sell to outside customer. What is the profit you want to earn? That we will add and that will be decided as a market price or selling price. For example, 170 is my selling price and I will sell it to outside customer. I manufactured for 70 and I selling for 170. Then you got a profit of 100 rupees. Now the same product I want to sell to my corporate group, another company code. Here you need to decide at what price you want to sell to your company code. Here so many factors will play to decide at what price you want to sell. So the transfer price, that is called transfer price. If we are selling to outside customer, then we are calling it as a market price. And whatever the price you are selling to your company code, another entity within your corporate group, that price we are calling it as a transfer price. That price may be same sometimes in some business organization. 170 I am selling to outside market, same 170 I will sell for my another entity company code also. Or maybe it may be more sometimes. I will add more or I will reduce this transfer price. If you reduce the transfer price, for example, you sold for 170 is the manufacturing cost, again sold for 70 only, then your profit will become zero here. That means if you sell the product, whatever you purchased 70 in second company code and for 300 rupees, then how much you will get? 230, you will get a profit. Here profit is zero, here profit is more. But manufacturing is done by company code 1. The total profit is booking by company code 2. That will be decided by the corporate group. In which company code you want to book profit and which company code you don't want to book profit. Or you want to book here only less profit and here more profit or completely here profit. So here it plays, the tax will play more role. If this country, maybe instead of example take IN20, this you take for example US20. And here the taxes are more in this country and here in this country tax is less, then this corporate group will try to decide to book more profits where there is a tax is less in that country, and wherever the taxes are more, there they will try to book show the profits very less. So in that way the transfer price will be decided, whatever it may be. That we'll discuss later at the time of product costing in detail. What is the transfer price, and how to set up it and how we will show. So now let us discuss only at highest level. What is the difference between your legal valuation and group valuation? In this example, the manufacturing cost is 70 and we are selling for 170. So now you booked profit is 100 and your revenue how much you are showing 170 and COGS how much it is 70 and then 100 is my profit. Prepare a P&L account and balance sheet, submit to your local country, fine. And this company code is purchased a product, maybe we are not manufacturing, just purchase and sell in this company code. You purchased it for 170 here, but the cost is showing 180. What is the difference? 10, maybe 10 happened for additional cost. So here you can see the receiver side I put cost is 180 and the sender side the revenue is 170. If you if you deduct 180 minus 170 means 10 rupees maybe additional cost happened, whether whatever be the expenses through taxes or maybe to other processes, something they did, whatever it may be, the cost went up to 180 here for this. And this company, after that, what they are doing, they are selling to outside customer for 300. Then how much revenue they earned? 300. And what is the cost? 180. Then what is the profit? 120 they will show to the local government as per requirement. And here you earned 100 and here in this company code the profit is 120. The total profit came to 20. Now we don't have any valuation. Assume we have only legal valuation. And now we need to prepare a group reporting or consolidation reporting at highest level, at group level, by combining two company codes. Assume only two company codes only we have in your group. Now what will be your revenue at group level? I don't want what is revenue for company code 1 and company code 2. What is total revenue across my all company codes? If you merge directly with the legal valuation, what is your revenue here? 170. And here what is the revenue? 300. Then total what is the revenue? It will become 470. But did you really get 470 income at group level? No. This is your first company code and you sold to your company code only. This is not real revenue for you. Here whatever you earned 170 is not a real revenue. You didn't sell to outside customer. You sold to your entity only. And this 170 is a internal revenue. When I am saying internal revenue, whenever I talk from corporate level, you sit here and if you say 170 is my revenue, no, that is not correct. 170 is the internal revenue. That internal revenue I need to eliminate it. So remove 170. Then what is your real revenue? Whatever you sold to outside customer, that is 300. And what is your real cost? Here 70 and that 70 whenever you are selling to 170 you sold out. Okay, the revenue we eliminated. The actual cost here is 70, right? And then here you are showing the COGS as a 180, but even though here you recorded as revenue 170, but here you are showing it as a 180. That means there is a 10 rupees difference. 10 rupees additional cost happened in company code 2. Here 70 cost and here 10 is the cost additionally. The total if you club, the actual cost for is happened 80. But here you are showing cost how much? 180 you are showing. The remaining 100 is not a real cost for you. That is the internal cost. Whenever you are transferring, that is because of this it's resulted. So that cost you need to eliminate it. The real cost is only 80. The real revenue is only 300. And 300 minus 80, the profit you earned at corporate group level 220, which is equal, which you are reporting at legally. But only the difference is revenue and cost is not correct. If you merge here, but profit is right. So I need what is the actual revenue we earned and what is the actual cost happening for me at group level. If you want this report, you need to go for group valuation. So what group valuation is doing? What is the difference to legal valuation? It is eliminating your internal revenue and it is eliminating your internal costs, and then I will remain my with original costs and actual revenues, and with that I can find out my profit. Of course, the profit here it is same, but I will come to know what is my actual revenue and actual cost. Okay, so this is the group valuation difference between your legal valuation and group valuation. And this group valuation, of course, here amount currency is same we used. Do you want in which currency this group valuation? Means this 300 is translated into another currency where in which currency you want to see this group reporting the same cost also. For example, in our case, let us do our company code currency is maintained with company code currency INR, the legal valuation we are doing in INR. Maybe if you have one more company code, later we will create. Then I want group reporting, the group valuation, the consolidation reporting, I want in USD. So that is group currency. That is 30 plus 1, 31 we need. Okay, so this we will use. On the other hand, we have a profit center valuation. What is a profit center valuation? For example, in this company code IN10, we have two plants assume. This box will represent plant 1 and this box represent plant 2. And the plant 1 is created as a profit center 1000 and plant 2 is created as a profit center 1500. The product, the basic product we will manufacture in the plant 1 and the cost is 60. That product, that plant sells the product to another plant, or we will transfer this once manufactured the product into plant 2. Maybe some small process or something we'll do there, and then from that plant we will deliver it to the customer, we'll sell to outside customer. We need to find out at the end of the year the performance of the plant, which plant is working properly, what is the from plant 1, what is the revenue and cost is happening and what is the profit, and from plant 2 what is the revenue we are getting and what is the cost is happening and what is the profit. That you want to prepare separate P&L account and balance sheet for plant 1 and plant 2. This is not actual requirement by the government or by the statutory rules. This is for internal reporting purpose for you want to do. Okay, so the same case now for manufacturing cost happened by the plant 160, and this plant after that directly we are not selling to outside customer and we will send it to plant 2. Whenever you are sending to plant 2, do you want to book any revenue in plant 1 or not? For 60 you manufactured and for same 60 if you sell to another profit center, another plant, then your profit will be 0 in plant 1. Okay. And that you are adding some cost, maybe 70, suppose 60 you transfer, right? Again 10 rupees work you did in the plant 2, then total manufacturing cost is 70, and for outside customer the final selling price is 170. Suppose here 60 and you sold for 60, assume 60 is there, then your profit is 0 here, and some 10 rupees additional cost happened, 60 plus 10, your cost here you will show as a 70, and that 70 product you are selling for 170, then 100 rupees profit is booked in profit center 2. At the end of the year, what the indication will go that through plant 1 we didn't receive any profit, no revenue, no cost, break even, 60. How much cost is happening? Only that much revenue is happening, but this profit plant is working very efficiently, we are getting 100 rupees profit, more revenue, less cost. But actually this is not the right picture. Maybe it will give at legal valuation correctly, fine, the 70 you are selling for 170, 100 is booked at company code level. That is fine. Legal reporting purpose is fine. At company code level, cost is 70, correct? At company code level, revenue is 170. At company code level, profit is 100. That is fine, external reporting. But internally, whatever you are evaluating, the plant 1 and plant 2 is not correct. Now, I need to book here revenue and cost. So if you talk from company code point of view, this is the internal revenue, right? 100. So this plant is selling to this plant. The product is still in your company only. It not went outside. No one has given you money 1 rupee also. But only you are exchanging the product between two plants. You are selling and purchasing between your two plants. And then you are booking revenue. Suppose here we decided we don't want to show here zero, and at least there should be some revenue for this plant, the actual revenue. So we decided to sell to second plant at 100 rupees. 60 you manufactured and you are selling for 100. So then your profit is 40. So what is the revenue here? 100. And here what is the revenue? 170. So within the plant, between the plants, if you do any business transaction, purchase and sale between profit centers, then there will be a internal revenue and internal costs. These two also will be recorded in profit center valuation. But in legal valuation, we don't have this 100 and 170, right? Only 170 you have. So this internal costs and internal revenue, which is resulted between profit centers, that is not there in legal valuation, that is excluded, that will be presented in the profit center valuation. Here also we have internal costs and internal revenue between two entities, that is eliminated in group valuation. Internal costs and internal revenue are eliminated, which is resulted between two legal entities in group valuation. The internal costs, internal revenue, which is resulted between two plants within the company code itself, that is eliminated at company code level, and that is recorded in the profit center valuation. So whenever you have internal revenue and internal costs in profit center valuation between two plants, then you can prepare the actual P&L account and balance sheet at plant 1 level. So if your requirement is to find out the real P&L account and balance sheet at plant level, at profit center level, you want to show the revenue and cost, what is happened for that plant, for that profit center separately, then we need to use profit center valuation. So these type of reporting, do you want in which currency? I want to assess this plant at locally, means whatever my company code currency, in the same company code currency I want to do this reporting also. Then in that case, the profit center valuation we will do in company code currency. No, I want in group currency level, I want this one. Then in that case, you can do group currency profit center valuation, but we will do this profit center valuation in company code currency. Okay, that's why company code currency 10 and profit center valuation is 2. The currency type of valuation approach we will follow 12, and currency type 12 also should be there. Okay, so with this we will follow to test. So now whenever we activate material ledger, at the time we decided to do material prices in multiple valuations, multiple currencies in this way. So the same should be in sync in the currency and valuation profile. So now you create valuation approaches or currency types in currency and valuation profiles this way. In controlling, general controlling, we have multiple valuation approaches or transfer prices. So whenever you are using these multiple valuation approaches, then we will use this concept of transfer price. The transfer price is the price at which you are selling your product to another company code. A transfer price is the price at which price you are selling your plant 1 to the plant 2. Basic settings. In that first step, we need to maintain currency and valuation profile. The transaction code is 8KEM. Okay. Nothing is there here as of now. Click on new entries button. Any name you can give, currency and plus valuation profile name. Maybe we'll give same like our company code or controlling area name. IN10, or if you want to confuse, then put currency and valuation profile 10. Select CV10, double click on details button, and you see by default legal valuation is there. It is reserved by the SAP. The legal valuation it is doing in which currency? In company code currency. The currency type is 10. The legal valuation is identified by 0. 10 plus 0, that is 10. Valuation approach. And click on new entries button. And then second, we want to do profit center valuation. In which currency? Profit center valuation also we will do company code in company code currency. This is second one. I think it's a not this is the first one. Next one is group valuation, and then this in which currency you want to do in group currency, and this is the second, and then save it. Now you can come back and see. Okay, so we are doing company code currency for legal valuation, and the same company code currency profit center valuation, and group currency for group valuation. So 10 plus 0, this will become 10 currency type, and this will become 10 plus 2, 12, and this is 30 plus is identified by 131. And here the sequence is important. The same we need to do in material ledger also. Right? Basically, this is material ledger. In material ledger, we want to do material prices in different valuations, in different currencies. 3. And the same, it should be matched with your currency and valuation profile. That's why first we are creating at controlling area level, the currency and valuation profile. And whenever you are doing next material ledger, we will do same thing in material ledger. Here, do I need to put first company code currency? By default, it came legal valuation. And then this row, can I maintain here in place? First group currency, group valuation, and then company code currency, profit center valuation. Is it matters? The sequence or however I want, I can keep. As per your requirement, this sequence should be there. What is your requirement? Once you activate material ledger, in material master, whenever you are maintaining your standard prices, as of now, we are using only legal valuation. That's why you can see in material master only one field. the standard price. But once you activated multiple currencies or parallel valuation, multiple valuations, then in Material Master, you can see three prices separately. What is the standard price? Or what is the standard cost for legal valuation? And what is group valuation? And what is profit center valuation? Three standard prices you can see in the Material Master. Then which one you want to see first, which one you want to see second, which one you want to see third. This is the matter. So now you decide in Material Master which should appear first, which should appear second, which should appear third. Accordingly, you need to maintain this sequence. This is important because once you make it active currency and valuation profile, you cannot change this. Here you can see this is the Material Master accounting one view. As of now, maybe you can see only one field, standard price, and what is the my price unit, what is the price control indicator, SRV, and what is your inventory value, what is your valuation class. This is fine. Whether your material ledger is activated or not, that we have seen. Whenever you go for parallel valuations, then immediately system, as per your material ledger and as per your currency and valuation profile setting, it will activate additional columns. Suppose you are doing only legal valuation and group valuation. So you are following two valuation approaches. Then here you can see only two columns, two different standard prices. If you are doing three, then system will show you in Material Master, in each and every Material Master, these three additional, two additional columns will be activated. Finally, you can see three columns and three different standard prices. In this example, in this screenshot here, the first one is legal valuation in company code currency. The second one is profit center valuation company code currency. The third one is group valuation group currency. And this price for legal valuation, and this is the cost for profit center valuation, and this is the cost. In this example might be the local currency is USD and group currency is UR. In our case, local currency is INR, group currency is USD. Now first legal valuation is appearing whenever I open my Material Master, and I can compare with my legal standard cost what is with the profit center valuation. So immediately next it is appearing profit center valuation in company code currency. Next column is group currency group valuation. Why can't the system is showing first here group currency and here company code currency profit center valuation? Because here you see the currency and valuation profile whenever you maintain, and with respect to that, the same we need to maintain in material ledger also settings. So in material ledger settings also we are maintaining the currency type which is maintained in your currency and valuation profile. 10 means company code currency legal valuation, company code currency profit center valuation. 31 means group currency group valuation. So this second digit represents your valuation view that you need to identify easily. That's why I always remember legal valuation is 0, group valuation identifies 1, profit center valuation indicator is 2. Here 10, 12, 31 is the sequence. That's why 10, 12, 31 is appearing. If you put 10, 31, 12, then this column will appear here. And once activated, you cannot change it. So how your material master, the prices look like the order. Accordingly, you need to maintain in your material ledger settings, the same settings is matter here sequence whenever we are maintaining currency and valuation profile. So I want to display first company code currency legal, this mandatory, anyhow you cannot change, that is first reserved. And second I want this one, again same company code currency with respect to profit center valuation. At each and every plant level, what will be the internal COG and interval revenue that I need to get it with a particular transfer price. And group valuation, that internal revenue and internal COGS which is there at company code level, that will be eliminated and need to do group valuation. For that, what will be the price, the cost standard cost at material master level that I want to maintain in this sequence. That's why this I'm following like this. Fine, save it. I think we did it. Come back. Assign currency and valuation profile to controlling area. Next step. What is our controlling area? IN10. For this, what is the currency and valuation profile we created? CV10. Enter and save it. You can see the activate button is still not active, and you cannot select it also. For that, we have a separate T code, and then you need to go and activate. Then system will check all the settings are in place or not, all are in compliance or not. So once we do material ledger settings, once we do profit center accounting settings, then we need to go and we can activate it. And of course, we need to do currency types also. Now, additionally, 12, 31, these currency types are not given by SAP, right? We need to do. And once that also done, then at the end, we can go and activate it. As of now, just we are assigning it, save it. Or the same, you can assign in your OKKP also. Previously, we have seen it's a blank. Now you go and see, or here itself, you can assign CV10, but still not activated. Until unless active, whatever changes you want, you can do. Once active, you cannot change. This will be graded out. Now, as of now, whatever versions we have, that is 0 version, that will be used for legal valuation. Just now we maintained, right, previously the versions. For planning we need multiple. Of course, plan is multiple, but actual is only one. The actual value is where it is recording. By standard SAP, as per SAP behavior, in version 0. Now we have 3 actual values. One is for legal, one is for group, one is for profit center. The legal valuation is recorded in version 0. Or in version 0 it will be stored, this legal valuation values. Then group valuation values, where it will store. It won't in version 0. Then we need to create our own version here. Or you need to tell to the system in which version you want group valuation values, the actual values need to be stored, need to be updated, need to be saved. And what about profit center valuation values need to be stored? So we need to create a 2 valuations additionally. Sorry, 2 versions we need to create with respect to this valuation. If you are not doing, not required, but we are doing, so we need to do. So next step, again I am doing separately, then you will understand clearly why we are creating these versions with respect to valuations. Same step, 0 KEQ, click on new entries button, and to identify easily those versions, what we will do, we will follow the naming convention like a group valuation. Group valuation, we are doing group currency, right? So that is 30 group currency, and valuation is identified by 131. So maybe I will put version name with B31 to indicate easily. Version for group valuation. Select both plan, actual. And next one, profit center valuation we are doing in local currency 10 and profit center valuation is 2, that is version 12. Plan as well as actual. Save it. Then select version 31. Double click on controlling area settings. And 10, your controlling area. Transfer, yes. And here, by default, system is taking legal valuation. So previously for version 0, we have legal valuation. Now version 31, we want to use to store the values of group valuation. The actual indicator has been activated for version 31, data delta version. Okay, then you remove plan and put only actual. And this we'll see with respect to product costing. If required, we will activate later. As of now, okay, or what we can do once we complete the material ledger and profit center settings, at end we will do the versions before activating the currency and valuation profile. Seems at version level itself it is checking other settings are in place or not. For example 31. Yes, we can do here. What is the errors? Legal valuation assigned to more than one version. Group valuation not assigned. Profit center assign version to each valuation. Activate the actual indicator and your evaluation. Maybe first let us see how the 0 is there. 0 is there with legal valuation. '31 assigned more than one version. Still it is showing V31 under legal valuation. Fine, maybe we will do after material ledger settings this step. As of now, I'll remove these two and then we will do later. Maybe still we have not done profit center accounting, profit center valuation also not told to the system to do. Let's remove at this time. And after profit center accounting, next we will do, so this will skip as of now. Then now we will try to activate profit center accounting. And then we can do material ledgers. So before doing material ledger, maybe we need plant and other MM related settings. We'll do MM settings and then material ledger. Then after that, we'll come back to activate currency valuation profile. Before that, we'll create versions and then we'll try to activate it. Okay, so this we can do next class. Maybe as of now, if you have any doubt, you can ask.